All righty, folks. Something I wanted to talk about with Taylor from Life Goal Investments is something a lot of you might be thinking about, and that is what is going on in the banking industry. We've talked about a banking crisis. We've clearly seen last week with JP Morgan, Citi, and Wells, all of them reporting record net interest margin. JP Morgan with $20 billion for doing very little. But you know what? We're about to get a lot of regional banks, and I don't think they're going to have the same kind of luxury. But let's have this conversation with Taylor from Life Goal Investments. How you doing, man?
Doing great. Yeah, I think you're 100% correct. I mean, JP Morgan stated they brought in an estimated $50 billion in a couple weeks from regional banks. And the regional banking sector, for all the right reasons, in my opinion, it cannot catch a bid. So KRE is the easiest ETF to look at to see how regional banks are doing. And it's come down. And even after the Fed stepped in and said, we'll back all deposits, it has not gotten a bid yet. And it is really an ominous sign because the market's always forward looking and trying to look past it and saying, hey, maybe they'll be able to right the ship and we'll get a pop in these stock prices. It hasn't happened.
Yeah. So when I thought a lot about the regional banks this weekend, because again, last week was the big banks. I kind of put out big banks was net interest margin, reserves for bad debt, loan origination, new deposits. Those were the four things I was looking for. Basically all okay. Regional banks, how much deposit flight? I think it was State Street talked about 10%. I think they reported this morning before it opened, 10% deposit outflow. And it's gonna others will be worse. I think loan origination clearly is off. We talked about 105 billion in 2 weeks. That's got to be a problem. Now people are going to be auditing their balance sheet. This whole hold to maturity versus mark to market. That's not going to look good. I fear that there will be 3, 4, 5 regional banks that report a balance sheet that is not great, an income statement that is not great, and they will create their own bank run. That's what happened at Silicon Valley Bank, right? They basically had to sell a bunch of treasuries, took a $2 billion write down. They went to the street to raise, I don't know, $2 billion. Bank run.
Correct.
I fear we may be staring at a couple of those in the next 2 weeks.
And you made a really, really good point on one of the videos that we did prior that, listen, bank runs are so much quicker, so much swifter because you go here and you go, give me my money back now. I don't have to go to a bank and essentially stand in line like you did in the 1920s or 30s during the Great Depression. Like that doesn't happen anymore. You can simply say, I'm going to move my money from this account here to this account here and have it happen in 30 seconds.
Yeah. Yeah, the digital bank run is going to be real. And of course, we talked about in video number 1, Apple doing 4.15% is not going to help this. So again, I do fear that there's some I don't know who it's going to be. And if I did, I wouldn't name them anyway, because that's not the right thing. But man, there's going to be some regional banks that report some, I don't know what to call it, ugly numbers.
If you're a regional banker right now and you see Apple come out with this and you go, listen, okay, before we were yielding more, we were providing a higher yield on our accounts than JP Morgan.
Better customer service, better yada, yada, yada. I give them coffee on Fridays and donuts, all those specials. Not anymore.
Not anymore. And then all of a sudden, Apple comes in and cuts your legs out from under you and says, we'll give you 2 to 3 times the amount of yield that you're giving your clients right now. Oh, and by the way, there have been online savings accounts that have done this. People don't trust them. They don't have every bit of information already embedded in their iPhone. All they have to do is press the button on the iPhone right now, and they get 4.15% interest rate. That is nuts. There has been no quicker, no swifter way to lose money for a regional bank than what was just experienced right now. Apple just dropped a bomb on regional banks.
And I'm just going to announce it right here, right now. I'm going to move $100,000 to Apple today.
Why wouldn't I? Why wouldn't you? This is a capitalistic society. You don't owe that, and you don't owe anything, and you can't. You can't afford to owe someone that much. When you can move it $100,000 and make $4,000 off of it in a year, whereas you're sitting somewhere potentially making 0, you can't afford to not do that. It's crazy, and this is just going to exacerbate the movement.
Yeah. So again, I think what we're, when you think about the little banks that are coming, do you kind of shiver with the ugliness that might occur?
my family was traveling. So we were on vacation last week and we were traveling back in a car. We were coming back from Maryland. Anyway, halfway through the trip in Jersey, we stopped and got food real quick. And I walked, and we were in a strip mall going into a Jersey Mike's, grabbing a sub quick to get on our way. And I walked by a bank, and I looked at the bank and I said, I've never heard of you. There's no chance I would trust my money to sit in this bank right now. Who is still banking here right now? And then I stepped back and I was like, man, that's terrible. Their balance sheet may be fine. Like, I have no idea. Why would I say that? But at the same time, that's the reality and the perception. We know they're regulated less heavily than the big banks are. So you have to trust the big banks, and you know the government's going to backstop everything in the big bank. So it is a tough environment. And then Apple steps in and says, we'll give you 415 basis points worth of yield.
Well, Apple's going to get 100 grand for me in the next couple hours. It's wild. I mean, it's shocking. It just changed. Banking changed today.
The largest institution the largest company on the planet just stepped in and said, we're going to disrupt your space. Show me what you're going to do about it. Otherwise, we're going to take all the assets. And they're not going to take all of them. Don't get me wrong. That's hyperbole. But they're going to take a meaningful chunk of assets from the old school stodgy banking sector. And what happens when they start making loans on the other end? Yikes. Right?
Oh my goodness. So Taylor, this is a lot of fun. I know you got an important video coming on Apple today. Where can people find it?
Yep. Yikes. Fumble over your words. At Life Goal Investments on both Instagram and TikTok. At Life Goal Investments.
Thank you, brother.